I'm Ollin Sykes and Scott Sykes. We're shareholders in the firm of Sykes and Company, PA. We work exclusively with pharmacies all over the country. And today, as a part of our Master the Margin Pharmacy Influencer series, we have the privilege of having Mike Bollinger, who is technically the head of pharmacy lending at Live Oak Bank. And we'll have an opportunity to gather your questions as you come along. You'll also have the opportunity to send those at the end to Ask Sykes at sykes-cpa.com, and we'll forward those to Mike as well for any questions that we don't get a chance to go over today. But we're tickled to death to have you today, and with no further ado, Mike, we'll get going from there.
You need to show your screen there.
And I do that by share screen. That do it?
There we go.
All right. Mike, you there?
Yes, sir.
All right, go right ahead.
Awesome. Thank you, Ollin. Thanks, Scotty. Good afternoon, and thanks for participating in today's event. It's a unique perspective of financing in a pandemic. I never thought I would be having this discussion, but I guess here we are. So today we're going to discuss financing that may be available to pharmacies and small businesses in general, as we look at the needs, the type of financing, and some of the uses of financing, both, basically pre-pandemic, during the pandemic, and what might be necessary post-pandemic. Ollin, I'm going to that next slide there.
Okay.
So every single business is unique. It is very important to remember that every business is different and unique. And then while many pharmacies are facing similar challenges during these times, the needs for cash or financing will be different based on the type of business model, the state or city they're located in, whether that's in a state that has more of a lockdown situation, or if it's a state that has kind of gone back to a little bit more open, and also how their patients and their employees have had to adjust to the pandemic itself. As you can see on your slide there, our Chief Credit Officer, Steve Smith, has said when businesses come up for air, they will find their balance sheets depleted and their liquidity drained. They're going to need some dry powder to get back on their feet again. For those of you that don't know, dry powder is a reference term to cash reserves. And you'll need that cash to be put back on your balance sheet in order to operate at sufficient levels, whether that's to purchase inventory, pay for your expenses, maybe that's your staff, and other operational expenses, and then allow for the cycles of cash flow that pharmacies will have in regards to accounts receivables and payables. It's important to keep in mind what is discussed today is really a reference point for you to have available to you as a pharmacy owner. We highly encourage you, from a bank perspective, to speak with your personal advisors, such as Sykes and Company, with Ollin and his team, especially since they're specific to pharmacy in the CPA accounting space. But there's also pharmacy-specific attorneys, and tap into all the resources that you may have available to you during these times. Ollin, I'm going to the next slide there. So if we look at going backwards, pre-pandemic financing needs before the pandemic, or really before 2020, historically speaking, pharmacies have been in a position of needing cash on their balance sheet as a normal course of business. If you think about it, if you estimate 90% of the pharmacy's cash flow is tied up in accounts receivable that are coming in either 14 to 30 or maybe 45 days behind, that means you're dispensing your inventory while waiting until you're actually getting paid for those dispensed medications. In addition, you will most likely be paying for your drug inventory either semi-monthly or every other week, or weekly, whatever you may be on, to your suppliers and wholesalers. And so you may actually get a cash cycle where sometimes you're actually paying for the inventory once, maybe twice, before you're even reimbursed. So that puts a cash strain on the business, and it makes it that much more important to have cash on hand in order to operate at the proper levels in order to pay your wholesale bills and all your other operational expenses. Therefore, prior to the pandemic, the financing needs of a pharmacy would typically have been on an acquisition where an independent buyer wanted to purchase an existing pharmacy, or when someone was looking to do a startup pharmacy or expand into a new market. But also, some pharmacy owners would create cash flow for themselves through purchasing their building where the pharmacy is located in order to, one, create an asset that will hopefully appreciate in value versus paying a lease or rent to someone else who owns the commercial real estate, or two, possibly lowering their monthly payments since you can extend real estate loans out 20 or 25 years. This would give the pharmacy owner the stability over their costs and less worry about what would happen if lease rates would increase or any other market uncertainties that may arise, such as COVID or this pandemic. In addition to acquisitions of the pharmacy or real estate, startup financing, other types of financing that would have been done pre-pandemic would have just been around working capital and the needs for refinancing debt. In either of these cases, whether you're needing working capital refinance, the pharmacy owner's objective would most likely have been to improve cash flow for the business by decreasing their debt payments per month. In all cases, however, the need for financing for independent pharmacies has always been there. And as a bank in Live Oak Bank, who dedicates an entire team of lenders, underwriters, and closers who have lent over $1 billion to just pharmacies since 2010, we have a unique view at the financial side of these pharmacies throughout the country and have seen what works and what does not work. But putting our pharmacy experience to good use when not only making a loan on the front end, but also servicing those loans, we pass along those anecdotal or evidence-based experiences, no matter what type of financing we may provide for the pharmacy. Next slide, Ollin.
And as we go to the next slide, just remind everybody that the opportunity for questions is there. Please put them in. We've already had one question about will the slide presentation be made available? And the answer to that is a video will be made available to everybody who's registered. So that'll be pushed out to you in the next day or so. So it gives you an opportunity to just concentrate here as Mike talks.
Awesome. So 5 C's of lending. Anytime you're discussing financing, it is important to think about the core 5 C's that a bank or a lender would be viewing as part of your loan request. Again, just like every business is unique in its own business needs, every loan request is very different based on several factors. So if we start with credit, the way I like to look at this is we look at every loan as what we call like a credit. And that could be more about the condition or the conditions of the loan. So when we say credit here, we're really talking about the all-encompassing project or the loan request itself. This may include factors of that could influence the borrower's ability to pay back the loan or how the funds are actually being used. In more specific terms, if you think about pharmacies in the industry we all work in, the conditions we face are decreased reimbursement. Maybe there's barriers to entry with third parties, such as preferred networks, and other concentration risk. Maybe it's controlled substances, high concentration of bed counts or facilities if it's long-term care, and maybe some other factors. So it's important for the lender to understand these conditions when determining if the loan request would be a good credit for both the borrower and the bank. Moving into the character side of the deal, this is the most common thing that most people think about is their personal credit score. That is the objective view into someone's past as to how they've handled debt and how they have handled payment to creditors through their historical view of their payment history. The second part of this is more subjective in that you're vetting out the individual themselves and their willingness to own a business, their capabilities to do so. Maybe it's their drive to be an entrepreneur or business owner, which are a little bit harder to identify as a lender as they're a little bit more subjective. As you continue to review the C's of lending, cash flow is very important for a lender, and I call it the economics of the deal. It's especially important for the cash flow to be there, but also it's important to know what type of lender you're working with, whether it's a lender that bases their decisions on cash flow or if they're basing their decisions on collateral. For example, Small Business Administration, or the SBA, they're a cash flow lending program if you're using the SBA 7A program. What this means is the historical cash of the business, or if it's a selling entity through an acquisition, the best indicator to show if the store can support the incurred debt that is being requested will be to look back at the historical cash flow of the deal. Maybe that's 3.5 years. Being that we're halfway through 2020, we would look at this year and then the last 3 years of tax returns going back to 17. This is especially helpful for the type of loans that pharmacies need, because a large amount of the value of a pharmacy is goodwill or an intangible value. If you think about the second largest asset, that might be the prescription inventory itself. Neither of those two things are something a bank can actually tag onto. So the cash flow lending makes for a good opportunity for people to use for pharmacy financing. When you're looking at cash flow, the lender is generally going to put together a budget and come up with what we call a debt service coverage. It's a ratio based on, after you've paid all your expenses, how much cash do you have left over after you've paid the loan, principal and interest, or any debt that's on the business. For example, if you have a one-time debt service coverage, that means you just have enough cash to pay back the loan and nothing else, which means you wouldn't have anything left over for taxes, reinvestment into the business, or just putting money on the side. So it's very important to have a higher debt service coverage when you're looking at these loans. The opposite of a cash flow loan would be a collateral-based loan, which sometimes you might hear it as an asset-backed loan, which typically will rely on a tangible asset, and in most cases that would be real estate, whether that's personal property or a commercial piece of property. And lastly, the cash or capital of the borrower is a crucial piece of the loan package. So depending on what type of loan request and use of proceeds, the amount of cash a borrower may need to put down on a project may vary and could be as little as 0% or as high as 20%, maybe more. So again, every deal is different in how the cash flow may dictate how much the borrower needs to bring in, or the type of loan that the borrower is inquiring about. They all require different cash injections, and the loan structure itself may dictate how much cash you need to bring into the project. As you can see, these are all very important factors for a bank or a lender to look into to check the feasibility of a credit or a loan request. Fortunately, Live Oak Bank's experience with lending to pharmacies and the backgrounds of our lenders having significant pharmacy experience allows for us to make for good decisions on behalf of our borrowers and the banks. Next slide, Ollin. So types of financing. So we've kind of gone through the lens that the lender will look through when trying to determine if they should do the credit or not. And so now I think it's important to share with you what types of financing might be available out there. And I look at it two different ways. I look at it as short-term financing and then more long-term financing. Taking short-term first, that's typically going to be something like a line of credit, or you may know it as a revolving line of credit, where the business can actually have an approved line of credit with a bank or credit union, where sometimes it's renewed annually, but it gives the business owner access to cash in a timely and efficient manner. Once you pull from a revolving line of credit, you can pay it down, and then you may pull from it again as needed, and that you can continue that for the ebbs and flows of the operating cycles or the cash cycles of the business. The challenge we see a lot of times with pharmacies, however, is that people will pull out the full amount of the line of credit and then they don't pay it down. They'll either pay the interest only, or it just sits there, which almost makes it more of a term loan than a line of credit. But if used properly, a line of credit could be a great source of capital for a pharmacy. That would be a great source of capital in a time like we have now. When you're thinking more long-term, the types of financing available may be a term loan through either an SBA 7A loan or potentially through a non-SBA loan, such as like a commercial or conventional loan. Again, most pharmacies having less tangible or hard assets, they really find themselves using SBA products more so than a non-SBA loan, just because it's more difficult to secure, as a lot of the loans will require the cash flow and less collateral. That being said, an SBA loan may also be beneficial for the pharmacy owner as it provides better terms in regards to the years to pay back the loan, and the structure to pay back the loan can greatly impact the cash flow of the pharmacy itself. I often tell people the structure of your loan is actually and the term is actually a little bit more important than the interest rate, albeit that needs to be competitive. The structure and term is really what's going to influence the borrower's ability to pay back the loan. If you can stretch out a pharmacy loan from 7 to 10 or 5 to 10 years, that makes a tremendous difference to the cash flow. And when you're looking into financing, it is important to review your specific needs for the loan and understand what levers you can pull that are the most important when determining which financing option is best for you.
Yeah, Mike, this is an important slide because we see a lot of pharmacies out there who may have a bunch of short-term debt on the books. They're paying 2 or 3 different short-term, payments for their debt a month, and they haven't even really considered it, terming anything out. Can they term anything out? But this is an important area that we see some pharmacies not fully take advantage of, I will say, as far as terming out this short-term debt that they may be loaded up with, and maybe reducing those interest rates or combining their short-term debts into one payment a month, et cetera, et cetera. So this is a important slide, I think, for pharmacies out there.
And I would also add that we see a lot of pharmacies who will maybe have a local line of credit with a local bank, and as Mike just indicated, they'll suck all those funds out. They won't use them really as a revolver. They come due once a year, and you technically, in most cases, need to be out of that 30 days a year, and they wind up with a serious issue because they can't pay it back. And frankly, I like to say if you have a line of credit in a pharmacy, it's almost a kiss of death because most folks use it in that manner, and that's not the manner that's intended. It's intended to be utilized to take care of short-term cash needs that can be paid back readily and easily, and clear that out on an ongoing rotating basis. So that's something you just need to be very careful of if you're dealing with lines of credit.
I saw one of those today. Client came to us, prospective client today. They had a line of credit on the books, had been maxed out for 2-3 years, and they were just paying the interest on it.
Yep, that's what happens.
Perfect example.
Yep, we typically see that as well.
Yep.
So moving on to the next slide there, Ollin. So during the pandemic, if we think about over the last 6 months or so, we've the need for pharmacies to have cash on hand has been evident, and I'm sure Ollin and Scotty have seen this. But in general, cash on hand is a necessary ingredient for any successful business. But when you're facing a crisis like a pandemic, you may not be prepared for the business changes or the operational changes that may be necessary to continue to operate. Again, whether you're in a spot where you can't operate due to laws and regulations of your specific city or town or state, or if you've been deemed essential like the pharmacies, thank goodness, they are able to operate, but at different capacities. So what we've actually heard a lot of pharmacy owners tell us is that they were able to stay operational in some capacity, but most had limited hours or had closed lobbies. But what that's done is it's increased delivery or curbside pickups. That presents different challenges and some benefits, honestly, but it does present some challenges in that, if you're having to deliver, 70% more of your prescriptions, well, that means more gas in the tank for the car. It means more drivers. It means more hours. And so you're having to figure that out, and you have to figure out those added costs that you may be incurring because of the situation you're in. The second thing that we heard was in March, we had a big run on prescriptions. A lot of people were getting fills early. They were getting 90-day supplies. What that was doing was depleting inventory faster than normal. And you may not have had the cash you needed to actually buy more inventory in a timely fashion, putting you into a bind there. But in both of those cases are just two examples of how it would impact your cash flow. And then when you think about, 90-day supplies may not get as much reimbursement as a 30-day, or you're getting the lag time of 14, 25 days of reimbursement. You have to figure out how to have the cash on hand to operate during that period of time until you can actually, get the business back on track and normalize and stabilize the business. Some pharmacy owners that have had to close their doors, or maybe have had a significant impact to their business because they might be in a niche market. I talked to a guy in the Northeast who had a pretty sizable chunk. 70% of his business was in one type of area, and it just closed up. Nobody was writing prescriptions. The clinics were closed, and he had a pretty significant impact to his business. So he just blew through his cash reserves, just trying to make it, to get through. And that's not uncommon, unfortunately. But then if you think about some of the assistance programs that have been put out there from the government, it's been pretty unique. And so the CARES Act for COVID-19 that was approved in March of 2020 did provide several programs that were made available to business owners, in which they were all intended to support small businesses during a pandemic, and they all have different objectives and different terms. So it's very important to understand what might be the best fit for you if you're looking for cash or capital throughout the pandemic itself. Again, I can't stress enough, you really need to speak with your own advisors. Sykes is a great advisor for you, but understand what these different programs are, understand how they work, and also make a decision based on what makes the most sense for you and your specific business. So I'll go through the next few slides. I'm just going to go through in brief detail. This is really not meant to be a situation where I'm going through each of these programs to tell you what they are. Rather, I'm just giving you some insight into what's available, and then I would highly recommend you reach out to your local lenders, your banks, your advisors, whomever, to figure out if it's something that you want to move forward with. So the first one we'll talk about is the SBA Express Loan Program. The Express program has been around for a long time, but you'll see that they did increase the loan amount from $350,000 to $1 million. What's really neat about this is you can actually convert this, kind of on the line of credit topic. You can actually structure it as a revolving line of credit, which may be something that pharmacies or small businesses could tap into as they try to ramp back up. It does allow for more flexibility in the use of proceeds than some of the other programs. It is not eligible for forgiveness, as the PPP loans are. And the main objective of the SBA Express Loan Program is to build back your balance sheet, really try to put some cash back on your balance sheet. The next one is the Paycheck Protection Program, and I'm pretty sure by now everybody has heard of a PPP loan. I would be fine if I never heard of PPP loans ever again, but we're there and we're still living it. So,
yeah, we're there, but we're not all the way through it with the forgiveness part yet. So we're not all the way through it yet.
I got you. Well, the 20-hour days for like 5 weeks doing PPP loans really caught up to me. So, but Paycheck Protection Program, a really neat program. It did allow for a loan amount of 2.5 times your business average monthly payroll. As far as I'm aware, it did end last week, so it's not available any longer. And as Ollin just alluded, they do have the second phase of this, which is the forgiveness side, which I cannot speak about. But it was used for payroll, employee salaries, mortgage interest, rent or utilities, and interest on debt incurred before February 15th of this year. And what makes this one very unique is that it was eligible for forgiveness, as you've heard a couple times, with approval. The main objective of the Paycheck Protection Program was really to maintain similar level of employees at the business. And so knowing that most pharmacies is a general statement, but most pharmacies had stayed open in some capacity. This was a really neat program for pharmacy specifically.
Let me just add that I know you guys, Live Oak Bank, worked around the clock with those PPP, and I know you helped out a lot of folks with that. So
we
hats off
did.
to you.
We did. There was one day that I told my wife and kids good morning at 6 a.m. and I told them good night at 7 p.m. and I stayed in my office till 3 a.m. Yeah, it was a fun time. Glad to do it because I think we helped a lot of pharmacies, but it was pretty wild times. So the next one that might be a little bit newer to some folks, just because it's not as well known, is there is a government loan program with the USDA. It does allow for a loan of $250 to $2 million. Again, various use of proceeds. But this one's very unique in that it's really focused on rural America. So you have to be in an eligible rural town by zip code, I believe. So if you are on this call and you are, in a rural setting and you need some funds, this might be applicable to you. And you could just talk to the bank and we can tell you if you're in a rural area for eligibility. The next one is the Main Street Lending Program. This is a little newer. It's only been out a couple weeks now, I believe. But it's a separate relief program for small and mid-sized businesses created by the Federal Reserve in the wake of the crisis. It is a 4-year term loan with interest and principal payments deferred for the first year. It's a very unique program. I would highly recommend you speak to a bank about all the ins and outs of how it works. But really the objective of this program was to keep credit flowing to businesses who were already in good standings before the crisis.
Mike, real quick on that, aren't the eligibility requirements, I don't know if you can speak to this or not, but they're a little more stringent than maybe some other ones?
They are. That's why I recommend you speak to a bank that's participating in the Main Street program, because then they can give you more specifics about your actual, specific business and your opportunity. You're right though. It's not an easy. I shouldn't say it's not easy. It's a little more complex in who's eligible and what it looks like.
And Mike, on the SBA Express loan, if they already had a PPP loan, is that something they're still potentially eligible for?
I believe so. I think the SBA Express is a separate loan item. So yeah, PPP in general should be outside of any of these other programs.
Okay. And so if they had an interest in the Express loan program, you suggest they just talk to their banking advisors?
That's correct. You need to find a bank that participates in the Express loan program. Not all banks do. So you need to find your bank that does. But yeah, that's what they should do.
Okay.
And then slide 11 there. There was a lot of talk about just SBA 7A loans in general, and if that program would still be around. And happily to say, yes, it is. We're actually funding a lot of SBA 7A loans as we speak. But that is still continuing to be a really good loan for pharmacies. Again, because of the lack of tangible assets, it is cash flow based. It does have longer terms. It has lower cash injections. It's got a lot of positives to it, especially when you're looking at pharmacy specifically. But the terms continue to be favorable for pharmacies through SBA 7A. And if you're in need of a loan, whether it's a refinance, if it's working capital, if it's an acquisition, startup, expansion, whatever, it's probably the greatest vehicle out there, especially when you can't find a lot of conventional or commercial loans just because of the lack of assets.
And Mike, we probably can assume that most listeners on this call are probably pharmacy owners. So a primary example of a 7A loan on expansion might be a file buy opportunity. from a store or somebody that's closing in their area that they want to take and consider that on, where you can take the equity in the existing pharmacy that you own and leverage that into an acquisition. Is that something you deal with quite frequently?
Yes, sir. Yep. And not just file buys. File buys are great because you can add scripts overnight with minimal costs, right? But it's if you're even doing an acquisition of another pharmacy, like a complete another business itself that you're acquiring, you can leverage the existing equity in your current business through an expansion, and it can decrease the equity injection that you might need. So it really would depend on the cash flow at that point. But if you keep the structure the same, so if Mike's Pharmacy, I'm 100% owner, I go and buy a second location or a third location, whatever it may be. If I keep Mike as 100% owner, I can create a new entity, but I can go buy that store, and it gives me some flexibility in how much cash I would need to bring down because the equity requirements are a little bit different. If it's Mike, Ollin, and Scotty, and we're all 33% owners, and we want to go buy another store, and then I become 50, and then you guys split up to 25 each, that would not be eligible for an expansion because the ownership structure has changed. However, if we were to go in 33, 33, 33, then we can use the expansion. So the SBA allows those things, and it really does create some unique opportunities for folks to expand. Great question.
Yeah. And we find a lot of pharmacists don't understand this is an option because they're presented opportunities almost daily in some communities with folks retiring or just giving up or having offers from big boxes and then coming to you as perhaps another successful independent. But this is a program that we see being used quite frequently with a lot of options, a lot of flexibility, and it's something you strongly need to consider from what we see.
It's really neat because you can keep your cash on hand in theory instead of injecting it into the project. So it does work really well. We're actually doing 3 expansions right now as we speak.
Yep.
So kind of looking to the future now, to look at the post-pandemic world. If you're generally speaking, small businesses will need credit. They're going to be in a position of seeking out capital to rebound from this pandemic. From a global perspective, I think it's going to be important to show a lender, one, how did you handle the crisis? What's your business model? Did it have weak links, or was it really good and robust and actually thrived throughout the COVID experience? Specific to pharmacies, knowing that most pharmacies were deemed essential, that really helped pharmacies stay open. We actually found that some pharmacies took the time to really go into like some med sync or to add immunizations or vaccinations or whatever it may be, to really expand their footprint. And it almost forced some pharmacy owners to think outside the box a little bit, which is very encouraging, especially from a bank perspective. But as you continue to need capital and have that need for cash, you're going to have to explain some of those things to a bank or a lender at some point in time, whether you lost revenues or if you had increased costs. Those things might not preclude you from getting a loan. It's going to be things that you have to explain, and everybody needs to be comfortable with. Showing a bank how you handled it, that you had a plan, how you're really going to go forward, and with the knowledge that a bank may have a tightened credit box than they would have had just 6 months ago. So those are some things to keep in mind from a general standpoint. And all in that last slide there, if you think more specifically, or if you get a little more granular on what some items a small business may need to focus on or contemplate as they address a bank to secure some financing or to get some capital. What were the impacts on the business from the pandemic itself? How were the employees? Did you keep all your employees? Did you have to lay off employees? Did you have to add anybody? We've heard of delivery drivers getting added, in several places. did you lose customers? Did you gain customers? What's the goodwill that came out of this event? Did you come out a little bit better or worse? And some of those things are going to be very specific to your store, and all of those are going to have an impact to your cash flow and your balance sheet, both positively and negatively. But for pharmacies, you know, it's very important to show your script count before, during, and after the pandemic. You know, especially if you're working with a bank like us who really understands pharmacy. We want to just see how the store performed at all stages throughout the crisis. You know, you need to highlight the increased costs or lost revenues that may have been there. And again, those things may not impact the decision to lend. It's just more about understanding so that, one, we put you into the best product available. We don't want to put you into a worse situation if we're giving you more debt or cash. And again, Live Oak continues to lend to pharmacies. We've been very active the last few months, actually last couple months, I should say. Acquisitions of one owner purchasing a pharmacy, whether it's a staff pharmacist looking to buy a pharmacy that they've been working in for a while, or if you own a pharmacy or 2 or 3 or 10 and you're looking for that 5th, 6th, 7th, whatever it is. We're working with everybody in those regards. Our experience in this space it uniquely positions us to understand the impacts of this crisis, and it's helping us structure these loans and put the right products in place for some of these folks that are needing cash, especially when it comes to these acquisitions.
And it's especially important as you go through all these processes here, we believe, to understand where you stand from an accounting perspective. We have many pharmacies that come to us that are still waiting on 19 tax returns, don't have any information for 19 other than perhaps cash receipts and cash disbursements, and don't have a clue whether they're making money or not. And if you expect to go to Mike or any other banker with incomplete information, God bless you is what I say. So you need to put the emphasis on making sure you understand where you are on an accrual basis, month by month. How you elect to pay taxes, whether accrual or cash, depends on a whole other set of issues. But if you don't have accrual numbers where your balance sheet, your receivables, your inventory, your payables, your notes, your cash is tied in each and every month, then you don't have a clue where you stand on your P&L. If you're not recording your DR fees that you're picking up from your third-party reconciliation system, that's also another issue, because that's the third most important issue right now we're seeing on P&Ls behind gross margin, payroll, and total benefits. So, I mean, these are the kinds of things that you've got to have in place as you go to your banker, as you request further funding, and what Congress winds up doing here or not doing here in the short term. There may be a PPP number 2. We don't know. What additional regulations are they going to issue on the forgiveness programs? And I'll just comment on that in just a minute. I know Mike probably doesn't want to, but we're advising our clients to sit on the sidelines until, in fact, the American Institute of CPAs is advising us as well, sit on the sidelines until Congress finishes whatever they're doing in DC right now, whatever you want to call that. Because a lot of the things that are potentially up in the air could and may impact the forgiveness aspect of getting whatever you've got on your balance sheet forgiven. For example, one of the things that's under consideration is if your loan is 150 or under, there's only a 1-page certification that's under consideration. And certainly that would be a heck of a lot easier than going through the paperwork that you have to go through for loans in excess of that, or if that issue does not potentially pass. But those are the kinds of things that we're seeing in the real world that they're important. Scotty, you may have some other things you want to mention too here before we get any other questions that anybody has in the audience.
No, I think you covered that very well. You know, obviously, knowing where you stand throughout a pandemic is very important. And we're talking about the 5 C's of lending here. A previous slide, you know, making sure your books and records and everything is tied up and where it should be is, to me, would be a key quality of a good borrower. So, and we're still seeing pharmacies each and every day that do not have any integrity in their books and records. Still, again, don't have 19 complete. So, that's an issue it's an issue in general in pharmacy because you need to know where you stand each and every day with the way margins are, but especially in a pandemic when your business is likely changing to some degree, you got to know what's going on. So, accounting fundamentals is key and first and foremost there in a pharmacy.
Yeah, and I'll add to what you guys are saying is absolutely right, because when we're doing loans now, we're getting financials, or we're requesting financials all the way up through June, July at this point. So we, if you look at pre-COVID, pre-pandemic, we probably were okay within 90 days or so, and now we're wanting up to the minute financials, and not everybody has done that in the past, and so it is forcing some folks to go back to their accountants and say, hey, I need this information. And that is a difference, especially when you're securing financing. We are asking for more up to the minute financials, which is a slight change than in the past.
Scotty, you want to talk about the assessment service that we offer here and how that could help some folks that are on this call today?
Yeah, we do an RX assessment service where if you're just a pharmacy out there, want a third-party opinion on your accounting and tax situation, we're happy to do that. What we do is we take the accounting file itself, so we'll actually get like a backup copy. If you're using QuickBooks, we get a backup copy of QuickBooks. We get your prior year tax returns. We review that internally. Then we get you on a video call and we really walk through your current situation, the balance sheet, the P&L, the tax returns, and give you specific pharmacy feedback, really, from all we do is pharmacy accounting and tax, on what your situation is, opportunities are, what the issues we see are, et cetera, and kind of give you that third-party roadmap of what you need to be working on, which is very valuable that we think. So we're happy to offer that service too.
And I would add that you come away with literally actionable items from this deep dive that we take here. Many times there are tax returns that need to be amended, accounting issues that need to be addressed, and whether we involve them or not, we can give you a complete third-party review of your pharmacy accounting and tax issues, and then you can take that information and do with it as you will. We do have a $1,495 charge for that, again, because you come away with actionable items that can be worth thousands of dollars to you. Mike, we've got a few questions here. I know Kurt wants to know, how do you value a pharmacy you're looking at during this pandemic? What different kinds of things are you looking at as a result of what we've been through the last 6 months?
Yeah, that's a good question. So from a valuation standpoint, as the bank, we need to stand clear of doing valuations. And, obviously we can't set the values on stores, but the one thing that we're looking at is, and I think hopefully this will answer your question, is we're trying to get to the net operating income of the pharmacy itself. And what that means is we're going to adjust the expenses and the cash flow of the business with as much tangible information as we can, as long as it's documentable, validatable, non-recurring expenses, whatever those things may be. And once we come up with that net operating income, we're going to do three things with that. We're going to, one, we're going to pay yourself what you need to take as an officer in the business. Two, we're going to make sure that you can pay back the debts that's going to be incurred, going forward. And three, we want to make sure that you have some money left over for taxes, reinvestment, whatever it may be. So when we're not looking at the valuations as much as we're just looking at what does the store provide as far as cash flow. We will look at the last 3 years of tax returns, which, to Ollin and Scotty's point, right now we're really in need of 2019 tax returns. And in some cases it really is beneficial for the owner to provide that to us. But we will look at those tax years. We'll look at the year-to-date numbers for 2020, and then what we'll do is we'll overlap the 2020 numbers with 2019 for the same time frame. So if we look January through June, for example, 2020, we want to look at January through June 2019 and see how they compare. And the other thing that we do is we can also look and see, because P&Ls, and Ollin and Scotty will definitely attest to this, P&L can be all over the place. We don't know what we're seeing sometimes, and you can almost double check it a little bit with the tax return. So if you get 2019 tax return, 2019 P&Ls, you can at least see if they look somewhat close, and it gives you somewhat of a better picture or a little bit more certainty that those financials you're looking at in 2020 are real. And in addition to that, we're going to look at the script counts and normalize those out if there's any 90-day or whatever it may be. So valuation-wise, I think the market's still where it was prior. I don't see anything changing. I would love, Ollin and Scotty, you jump in there on the valuation side, but we're not seeing too much of a change. But from a cash flow standpoint, that's how we would look at it.
Yeah, and I would concur with that. We haven't seen a lot of valuation changes during this period of time. In fact, we've seen some pharmacies that have actually taken fire. We've taken some other pharmacies that have stayed relatively same. We've seen some other pharmacies that perhaps were in a medical complex where the doctors weren't coming in. Obviously, they've been dramatically impacted because they're getting a tremendous amount of new scripts. And with folks not coming into the doctor's offices and they've been in a medical complex, they've had a tough time. So it just depends on your location, how you've addressed curbside delivery, drive-up windows. We still have many pharmacies not delivering. It's hard for me to believe that, but we do. But we've not seen dramatic changes in valuations. And quite frankly, we've seen more action with pharmacies, with folks interested in purchasing or starting up pharmacies in the last 2 or 3 months than I've seen for some period of time. Just want to say also before we wrap up here, and you still got just a few minutes if you want to put some questions out here, that everything we've talked about today is general information only. You need to seek advice of your accounting, tax, financial, and investment advisors on anything you may do. That includes your banking folks that you deal directly with. But this is just general information only. So just be very careful on how you use that. Here is Mike's contact information that we're showing up here on the screen here. Is his phone, his email address here at mike.bollinger@liveoak.bank. And of course, he's at liveoakbank.com. He's on Facebook, LinkedIn, and Twitter, and everything else. So again, this slide deck will go out in a video to you. Here's our contact information if you have the need to reach out to us, our direct numbers to our desk, email and Twitter accounts, Facebook, LinkedIn. And I will say that if you subscribe to our YouTube channel, you will receive videos on an ongoing continuous basis because we have literally hundreds of videos we produce on pharmacy Pacific only topics that are on our website under media resources that we invite you to take a look at and again subscribe to. So again, those slides will be available to you probably tomorrow, Marcus, to answer that question. They'll be pushed out to you in a separate email. And Mike and Scotty, any other closing comments you guys want to make here as we come up on the hour?
No,
Mike?
I appreciate the nope. Thank you for having me. Appreciate it.
Scotty?
Thanks for being on today. Yeah. If any questions, we're happy to help any way we can. So please feel free to reach out to us.
Again, just a general question box would be Ask Sykes. That's SYKES at Sykes-CPA.com. We'll direct it to the appropriate persons, depending on your questions. But we appreciate everybody being on the call today and look forward to having you on the next Master of the Margin series that we'll have in, I think, next week. Thank you very much.
Mike.
Have a great day.
Appreciate it, Mike.
Thanks, Mike.